of the screen, which be, okay, you got two sides of the screen. This vertical line right here, that separates the left side of the screen from the right side of the screen. And the neat thing about that vertical line, you can grab it and move it. I can move it almost anywhere. Whoops, yeah, there we go. So move it over. Now, to get the list of your own personal stocks into the calendar, top left corner, I have my watch list. So the very next tab next to the watch list says quotes. So I come up to the watch list, very next tab over says quotes. I click onto that. Now a window opens up. And down here towards the bottom, it says create a watch list. So I want to click on that create a watch list. Right there. A new window pops up. And look at this red box right here. Well, that's where I'm going to put my list. Here is where my list goes. Whoops. I actually got to click on it. Try it one more time. Here is where my list goes. Okay, see it? Here is where my list goes. Okay? Then I want to add symbols. Now I have two opportunities. I can add them one at a time, clicking here, or I can import from a list, a CSV file, comma separated value, comma browse, or CSV, yeah. So let's add some stocks. Okay, add symbol. Okay, Ford, General Motors, IBM, whoops, GM, AT&T, Visa, Verizon, Macy's, MasterCard, MSFT, Dell, INTC, Walmart, WMT. Okay, so you can add whatever stocks you want if these are the ones you like. Remember, step one is find stocks that you like. Well, what are these? MDT, I love Medtronics. Okay. WU, never heard of it. Find stocks that you like. Put it in. Okay. Before you leave, make sure you hit save. So I hit the save button. Okay. Now let's get rid of this. Now let's come over to the calendar. Are you ready? Now in the calendar, top left corner, where you have this little window there, you got a little sunshine right there. Or you call it a wheel, call it whatever you want to call it. And then I want to click on, this window pops open. I want to click on personal because it's a personal list. Now another window opens up and it says, here is where my list goes, right there. Click on that. And this is all the dividends that are paid out on the stock list that I just created 2 seconds ago. Okay? General Motors, Macy's for the month of June. That's it. Okay? Let's go back up because I don't really need to save that list. So I go back to here. Back to the watch list right there. I click on that. And then it comes all the way down here where it says delete. So it tells me which list do I want to delete. Here is where my stock list. Oh, where is it? Where is it? Delete right there. Whoops. Right there. Okay. Are you sure you want to delete watch list? Here is where my list goes. Yeah, I don't need it. I was just showing a demonstration. Now it's not there anymore. Simple. Now, Thinkorswim, I do have to admit, is a little clunky at first. But after you get used to it, you can breeze through everything really quickly. All right, so we had two to take a look at. Medtronics, Catherine, Joby. You got to give me the ticker symbol, kiddo. I never heard of that. Okay. Forget I say guarantee. But I'm kind of curious, dogs. Why would you say that? Oh, I'm kind of curious. Now, see, if I was borrowing money from you and I guaranteed you personally a rate of return, well, then, yeah, I could guarantee you a certain rate of return. But if I'm not selling you anything, I'm not doing anything for you, a guarantee would be meaningless unless I give you a guarantee on something that you and I are doing together. So there has to be some kind of exchange happening there in order for me to offer a guarantee. And I do offer a guarantee. You know, I borrow money all the time. I guarantee people 20%. How's Procter & Gamble today? Tiny Coco, how are you today? Bruno, Target. We'll take a look at Target. I like Target. Ooh, greetings from Serbia. Well, hello there. Uh-oh. Hey, Hakuna Matata's here. Woohoo! Thanks for the roses, buddy. All right, so what are we doing next? CLSK, never heard of it. So let's find another one. And what was that one we wanted to take a look at? Laura wanted to take a look at FedX, FDX, FDX. Now I'm going to press the button, okay? In your head, count how many seconds for you to see the 5 things I'm looking for. You ready? Here we go. Okay? High, low, was, is. What's the direction? Up, down, up. Okay? Up, down, up, down, up. That's it. But I'm going to say no to FedEx. Remember, 3 to 4 seconds, I can isolate exactly what it is I'm looking for. The top, the bottom, where it was, where it is. Look at the motion. Up, down, up, down, up, down, up. Well, right now, it's not where I want it to be. So let's zoom in a little closer and I'll show you exactly what I'm talking about. What do you think? Beginning of the month, we're right here at 202. Well, now we're at 232. 202 to 232. That, my friends, is a 15. From here to here, a 15% increase. Now, we all know, think about it, okay? We all know a 15% increase. You're going to have people like me and some of you in the audience saying 15%? Hell, I'm taking 15%. 2 or 3 weeks, why not? Catherine, when you say Joby, G-J-O-B-Y, you actually got to give me the ticker symbol because I've never heard of that company. You need to put a profile picture on this account also. Yeah, probably. Dog, 52 a year could turn 10,000 into 576,000 in 10 years. Dog talk, you know what? I'm going to show you something. I'm going to blow your mind. You ready? It's J-O-B-Y, the ticker. Okay, we'll take a look at it. Hold that thought. This is going to be for dogs talk. You think 10 years, huh? To 576? Watch this. You're going to love this. Okay, my website, The10MinuteTrader. Where is it? Where is it? It's right there. Okay. Right here. Right there. Now, doggy, you ready for this? All right, dog, you ready for this? This is a weekly compound interest calculator. Now, you may think to yourself you've seen them before, but I can almost guarantee you've never seen one like this. Okay, so let's say you say 10 grand, 10 years. All right, hold on. First thing we want to do is initial deposit, 10 grand. You ready? Here we go. Okay, 10 grand. That's it. Now, do you want to add a few bucks here and there every week, every month, every quarter? You have the opportunity to do that right here. You can put $10 a week in. You can put $20 a week in. You can put $50 a month. You can put $2 a month. But let's just say we don't put any money in. None. Zero. Okay? So we'll put that to 0. Okay, that's at 0. Oh, for those of you on your phone trying to see this, this screen here is live on YouTube, and it's being recorded. So after we're done here tonight, roughly right around 11 o'clock, which I'm going to quit at 11. We're starting earlier and quitting early. Daylight savings, you know. Anyway, so, yeah, this is live on YouTube, so you can actually see the numbers better. So, $10,000, 0 money added, okay? Okay, interest rate, 1% weekly. 1% weekly. Okay. Now, I wanted to look at yearly because we can do this monthly, figure out how much it is monthly, but I want to do yearly. He said 10 years. All right, so 10 years. Doggy, you ready for this? $10,000, 10 years at 1% per week. Okay? You say 576. Hold on, wait till you see this number. All right, compute savings. Okay, $2, $502, $6,502, 600,000. What was that? Wait a second. Hundreds, thousands, 10,000s, 100,000s, millions. 1.7 million, brother. Okay, $10,000, 1% a week, 10 years, nothing else added. 1.7 million. And how much did you invest? You invested 10 grand right there. How much interest did you collect? 1.7 million in interest. Okay? That's the beauty of compounded interest, because you get interest upon interest upon interest upon interest. Okay, Laura, we just looked at FedEx. Okay, so let's get out of there. Yeah, see, that calculator didn't exist before. I wanted to know. Seriously, I wanted to know if I added $5 a week, what it would look like. If I added $20 a week, what would it look like? If I added, $250 every other week, bi-weekly, what would it look like? I had to create that calculator because it didn't exist before. There's another calculator I want to create to work the equation backwards. Think of it this way. If you need, let's say, $8,000 a month to live comfortably, and you only had $40,000 right now at 1% a week, and you put in X amount per week or per month, how long would it take you to get from where you are to where you want to get? And if you increased it a little bit here, a little bit there, I want to calculate, actually be able to tell me all that interesting stuff. And that's going to be a little bit of, see, I can figure out the math. The math is the easy part. It's the creating of the app I'm clueless on. Okay, so we already looked at American Express. We said FedEx, see, 30-day bottom, 15% increase. Yeah, this is not time to buy, my dear. And for me, okay, this is always for me, so you guys got to figure out whatever I say, put yourself in my shoes. Does that make sense? Is that something that I would do? Okay, Simba, what's that, BDX? What is that, BDX? I've heard of it. What is it? Becton. Hell no. I don't do monthlies. I already said that. No to BDX. Brennan, how are you doing, Brennan Lee? All right, we got a question over here. Robert, new to trading, have no educational knowledge or experience or money. Well, I can help you out with a few of those. I can help you out with the knowledge and the expertise. The money thing, that's a you thing. Okay, whether you start out with $5, whether you start out with $5,000, whether you start out with $50,000, whether you start out with $5 million. Okay, we're all different. We all have a different journey. What is it you want to do? Okay, that money comes and goes. Joe wants to take a look at Wally World. Hey, Austin's in the house. So, Brennan, if you're interested, you want to have a chat, send me DM me with your number. I tell this to everyone every night. Every night. If you want to have a conversation with me, send me your phone number. I will give you a call. But understand one thing. I do not email. I do not text. I do not WhatsApp. I do not Telegram. I do not do any of those things. If you get emails or you get a communication from me, other than a phone call, it ain't me. Plain and simple. Okay? If you think you're talking to me through a voicemail or through a text or something like that, no. Hakuna Matata. You know how I feel about both of those. Why are you asking me? You know I don't like advanced micro devices, and you know I don't do NVIDIA. Okay? Now, you've been here long enough to know I don't like either one of those. So why are you asking? That's an interesting question. Why are you asking? Joe, Wally World. Let's take a look at Wally World. WMT. No. Wasn't that quick? I tell people 3 to 4 seconds, I can tell you if I want to look at it or not. High, low, was, is. Look at this. Up, down, up, down, up, down. Now it's going up. Well, why don't I like it if it's going up? Well, look how much it went up. Okay? Everything is in relative. Okay? How much has it moved? Well, look at your last 30 days. The 97 jumped to 101. Then from 101, you get your profit taken, brought it down to 93. Well, from 93, it went up to 99. Well, that's $6. Well, $6 is about 8%. Maybe. Could you do it and go for more? You could if you wanted to. Well, let's take a look at the seasonality chart. Now, I'm not quite sure how many of you know what the seasonality chart is. So let's take a gander. To briefly explain to you a seasonality chart. We all know the seasons: winter, spring, summer, fall, first quarter, second quarter, third quarter, fourth quarter. We all know that. Well, let's look at it in a different light or a different view. Well, what do I mean by is, how do certain stocks react from winter to summer? New Year's, Thanksgiving, Christmas to Easter. Certain times of year, stocks create a certain movement. Some of them do. Why do Weight Watchers go up in the beginning of January? Come on, we all know that one. Hershey goes up in the first 2 weeks of February. You should know that one. Certain stocks move predictably every single year. Well, here's Walmart right here. All the way to the left, January 1st. All the way to the right, December 31st. The blue line, well, that's the movement this year. This blue dot here, that's today. Okay? The red line, 10 years average performance. What does a stock do on average over the last 10 years? Well, from January to December, it's a nice steady climb. Well, if we buy it in January and sell it in December, we can make a profit. That's what it looks like. Okay, but I want to look at this area right here. That's today. Here's the next couple of weeks. 6/24, which is today. 7/1, July 1st, July 7th. Basically, this thing just goes sideways this time of year. Okay, well, what's good for that type of trades? Well, you got spreads. Spreads are great for a stock that's just flat and goes nowhere. So is a covered call. So is a calendar spread. It's called seasonality, and end of the year, it's called window dressing. Absolutely, money. You're 100% correct. How many stocks are you working with weekly? Every week, anywhere between 5 and 15. Okay, Altamir, XRP. Two things. Number one, XRP is not a dividend stock. XRP has not been around for 20 years. So no and no. You like that, dog? I'll just call you dog. Okay? All right, so I'll say it again. If you want to have a chat with me, send me your number. I will give you a call. Okay? Well, if I had 5 million, I wouldn't be doing this. I would only hold stock. Okay, nothing wrong with that at all. But here's the thing. Alpha Nosol, we all don't have 5 million. Okay? Not everybody has 5 million. And not everybody will ever have 5 million. Most of us won't see 5 million all at once. We'll see 5 million over the lifetime. You know, it depends. If we go to work when we're 16, 17, and we stop working in our 60s or 70s, maybe we'll see $5 million float through our fingers. But to have it at one time, not very many of us are going to have that privilege. Oh, how did it go with your software? We haven't even finished the software yet. Still working on it. I know, but you would ask in general, what do you prefer from a fundamental analysis? Fundamental analysis, well, you can't get any more fundamental than consistency of profitability and weekly options. Over and above that, everything is where would be on the list in order to make one of those lists that we're talking about. Dividend King, Dividend Aristocrat. It takes fundamentals to get onto those lists. So once they're on that list, most people have already done the work for us. I mean, we know the Dividend Kings have 5 decades of increased profits. Okay, most of them have weekly options and some of them don't. Can you look at Procter & Gamble? Tiny Coco, Procter & Gamble. When did we look at Procter & Gamble yesterday? I'm pretty sure we did. Procter & Gamble, PG. Ooh, did you see that one? Ooh, I like that. High, low, where was it? Where is it? Look at the motion. Down, up, down, up, down, up, down, up, down, up. Okay, fine. That's where we are. What do the numbers look like? Current price, 160.36. The 160 is going for 115. Not this week. The 160 for next week, 161. Here's the thing. If I'm buying it at 160.38 and I sell the 160s, pick up 160 and I lose 38 cents, I'm only making 130. It's not quite 1%. I bought Walmart last week and it had moved up a bit. Okay. Nothing wrong with that, Andrea. Robotaxi. Come on. Hakuna. Okay. You know, Robotaxi is not 20 years old. Okay, you know the rules, and I don't know why. See, I was expecting more from you, okay, because you're writing a book on this, but you're asking me those that are not what I'm looking for, okay? Tesla doesn't have dividends. You know that. Tesla is not on Warren Buffett's list. You know that also. I love the idea of Robotaxi. I do. Crazy man. HP, Hewlett Packard. Nope. HP is Parker Hannifin. HPQ is Hewlett Packard. Lori, Ford. Robotaxis are extremely to maintain. Thank you, money. Let's finish up with Procter & Gamble first, okay? Crazy man, you're absolutely right. HPQ is ticker for Hewlett Packard. Yeah. All right. Hewlett Packard, let's see this. Oh, sorry, Procter & Gamble. Sorry, not Procter & Gamble. Sorry, I'm just curious. I know it's off topic. I get it. Curious minds wants to know. A year ago, Procter & Gamble was at 168.51. The high of the year was the end of November, and that was 180.31. Well, the bottom of the year, take a look at this. What do you think there? 1, 2, 3, 4. 4 times it tested the bottom, 155.62. 4 times, 1, 2, 3, 4. That is what you call support. So can you say the bottom support for Procter & Gamble is 156? Okay, so the last 30 days would be right there. Okay, so what do you think? Take a look. 166 jumps up to 172, drops down to 158. 2 days to the upside. Today, the third day. Okay, a higher high and a higher low. 3 days to the upside, right there. So that'd be a perfect opportunity to get into Procter & Gamble if you like Procter & Gamble. And that's always the big one. Okay, number one is, does it make sense? Number two is, do I like this stock? Number three is, do I like this stock at this current price? Let's take a look. The 160. All right, so let's do the 160 for next week. See what it looks like. 160 right there. Okay, just one contract. Okay. Market order. I'm thinking, hold on a second. Somebody said something about buying a put. That would be first triggers all. Right, oh, first trigger sequence. Ooh, that would be a good one. Let's do that one. First triggers sequence. I'm kind of curious what this guy said. Paste from clipboard. I'm gonna have to figure that one out. All right, confirm and send. Here we go. Here's the order. Buy one covered call, Procter & Gamble, 100, that's the weeklies. 3 July 25, that's next Friday. The 160 call option, Procter & Gamble at the market to open, it's 2 orders. Okay, 141 is the profit, 15,859 is the investment. So let's look at the rate of return. Okay, so we get 141, and we're going to divide it by 15,859. I'm going to say no. 0.88. That's not 1%. As much as I like Procter & Gamble, the numbers just don't work. Crazy man wants to take a look at Hewlett-Packard. Get back to the beginning. Oh, get back to where you once belonged. HPQ, Hewlett-Packard. Woohoo! Probably not. Look what's happening now. Okay, 30 days ago, 29.50. We dropped all the way down to 23.50. Back up, back down. Yesterday's our bottom, 23.45. Okay, one day up. We'll look at it again tomorrow. But at this moment in time, Hewlett-Packard is just a waiting game. Okay, could this be the bottom? Yesterday's bottom? It could be. But we need more days on the right side. So more days on the right side will tell me whether or not yesterday is the bottom. It either is a yes or a no. So we're going to wait a couple of days on Hewlett-Packard. I'm going to write Hewlett-Packard for next week. Okay. Guy has writing on his wall, but cannot read because this smart money guide put it up wrong. Hey, Cipher Solutions. Love people like you. Come in, first time, automatically insulted the host. Okay, that's the way to start. Come in, first time here, automatically insult me. Hey, that works. Next, know that camera is mirrored. Yep, got it. The entire video is flipped. Yep, well aware of that. Ooh, Cipher wants to take a look at Oracle. He insults me and he wants me to do him a favor. Imagine that. Anyway, well, let's take a look at Oracle. So again, Hewlett-Packard, I'm going to wait another day or two to see what happens here. So we got the high, we got the bottom. Well, what's it doing now? Is it just going to stay within this range, or is it going to turn around and go back up again? Tiny Coco, when you're just starting with investing, it might be difficult to determine whether you like a stock or not. What makes you like or dislike a stock? All right, Tiny Coco. I'm going to say this again. You'll hear me repeat it over and over and over again. Two and only two things I require in any stock that I invest in. Number one, consistency of profitability. Do they have 2 decades of consistent profits? That means profits this year are higher than the profits from last year, which are higher than the profits from the year before, which are higher than the profits the year before. So every year, the profits should get higher. Let me show you really quick what I mean. It won't take long. Let's go Yahoo Finance. No, this one right here. Okay. This won't take long, okay? Now, as I've been saying, I like dividend stocks, specifically dividend stocks that are consistently increasing in their profits. So here, Yahoo Finance, we're looking at Microsoft. It's a perfect example. Now, I'm going to go over here where it says historical data. Historical data is also known as the data stream, where all the information is being held. The high, the low, the open, the close, the bid, the ask, all that kind of stuff. So I want to take a look. Now, I could, if I wanted to, take a look at the quarterly reports and the annual reports to see if they're consistently profitable. But the interesting thing about dividend stocks, okay, hold on, historical prices, I want to click on that, and I want to look at the dividends only the dividends. Now I'm going to explain why in a second. But right over here, the time frame. This is 1 year. Well, I want to look at every single dividend this company has paid out. It's going to make sense in a second. Hold on. It's like a good movie. Everything all comes together at the end, and it's like, oh, that was great. So here we are. You ready? So, okay, Edward, I'm going to address that question in a second. Okay. So this is specifically for Tiny Coco, all right? You asked, how do you tell a good company? Well, 2, consistency of profitability and weekly options. Well, I already know Microsoft has weekly options, but this is what I mean by consistency of profitability, and I want 2 decades. Well, it's 2025, so I'm going to go all the way back and look at 2005, because 2005 is 20 years ago, okay? So 2005 right here. All right, now, this is very important. A dividend is a portion of the profits the corporation makes and gives back to the investors. So, if the company makes more money every year, the dividend will increase. If the company makes less money, the dividend will decrease. Hand in hand. You have 2 choices. You can go right to the dividends and see if the dividend increased, well, more than likely the profits increase. Or you can go to the annual reports and the quarterly reports. Go ahead, look at 20 years of quarterly reports. Does the company consistently profitable? Well, if they are, the dividends will increase. All right, so consistency of profitability. You ready, Tiny Coco? 2005, Microsoft, 8 cents. 9 cents, 10 cents, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year, their dividend went higher and higher and higher and higher and higher. The only way you can increase the dividends, the money you give to the investors, is to be more profitable. If the company's consistently profitable, that's 1. I got 2 criteria and only 2. Consistency and profitability. Weekly options. That's it. 2 criteria. For me, that's what I consider a good stock. A company that is consistently profitable for more than 2 consecutive decades. Okay, so let's take a look at more of what you guys have to say. GC, I don't do any cryptocurrency whatsoever. Crazy man, we already did Hewlett Packard. DKG. Got 1% from Dow, Harley Davidson, and Mara this week. Thanks for teaching this strategy. Hey, I'm happy for you, brother. All right. Can you see level 2 on TradingView? I don't use TradingView. Money. Sanitize tire brakes, inspection, a payroll, a garage, pay a city for parking spaces. Okay, not quite sure. Money, what you're talking about. Does your daughter still do this? No, she does not. Okay, when she turned 13, I was the devil. I was the ATM devil. So when little girls are 7, 8, 9, 10, 11, 12, they're daddy's little girl. And when they turn 13, daddy's the ATM devil. That's it. Daddy's the ATM unfair, unlistening, uncaring devil. Okay, it wasn't until she turned 25 that she started to realize that it was all her, it wasn't me. But, you know, it is what it is. Okay, we are just sitting here trying to pick your brain like a sponge, full discipline. All right, can you see level 2 on trade? I didn't use TradingView. Back in the day when you were day trading, what tools did you use then? That was 15 years ago. What percentage of your portfolio do you collect covered calls on to get 1% each week? Over 90%. Okay, so during certain times, okay, when, let's say when the powers that be aren't fighting each other, when everything's kind of normal, okay, so the dude in the White House now, half of the country doesn't, well, half of the people in Congress don't like him just because it's him. Okay, that's it. It makes no sense whatsoever. It's called TDS, Trump Derangement Syndrome. I really don't care for the guy, but here's the thing. Okay, he was elected. Let him do his job. Give him his 4 years. Throw him out. Okay, we gave Biden 4 years. Let him do what he did. Throw him out. Okay, so when the country is not walking on eggshells because of some one person, yeah, that's usually 95% of all my money's invested at all times. Because why would I leave money just sitting around? Because, all right, here's another way of looking at it. I'm 61 years old. I'm going to be 62. I pretty much know when my credit card bills are, when my mortgage needs to be paid, when my electric bill is due. I know when all my bills come due. So why should I have money sitting around gaining almost nothing? All my money's in my trading account. I have a debit card and a credit card attached to my investing account. Because every week I get money from the covered calls that I do. Eric, Intel. Ooh, I like Intel. Hold that thought though, because we got a couple other people here. How much you lose? How much money you lose? I didn't lose anything this year. Exactly. Can you recommend some good books to get me started in trading? And the book that I really like is Wade Cook's Wall Street Money Machine. That was simple, easy read, and it's easy to understand. The guy was a cab driver. He was a cab driver and says, you know what? It can't be that easy. And he explains it as easy as it was. Wait, who has the 83-cent dividend? Latina hunting specialist. Hold that thought for a second, because I'm not quite sure where you got that idea from. All right, CVX. Okay, yeah, pause the questions here. Kakaram, what's going on, brother? All right, what else we have? As much as I hate fiat, I still was forced to learn about it, even if I'm a broker in Africa. Okay. Edward, loss doesn't matter if your earnings outweigh what you lose. I'm going to agree with you there. This guy, pretty good. Thank you, Cypher. Not true. You have good months and bad months. Okay, I'll agree with you there. Bruno, the book question is a good one. Can you make Google and Target, please? Well, I'm not going to do Google. It's a waste of time because they only have 2 years of dividends. Okay, so 2 years? Yeah, no, thank you. Solutions. Investing is you take when you start, so you're bound lose at some point. Okay. Cindy, you remember me, Bruno? Uh-oh. Hey, y'all. Hell yeah. He won't find out what you lost till the end, and that sucks. I have no idea what that means. Where's my CRCL? Yeah, hell no. Oh, he's got a touch screen. Nifty. Cypher, you are a rude guy. Okay. I'm a realist. Okay. MJ, when selling covered calls, should you pick a stock with more expensive options? I've noticed some stocks have more expensive options than others. Say, MJ, I'm not looking for the option price itself. Okay, I'm looking for the company. The company, is the company a good company? Is the company well run? Is the company consistently profitable? You got to remember, a company basically has, the higher ups, which is the CEO, the CFO, the COO, and all those people at the higher ups. And then you have all the workers. Okay, so are the upper up, the CFO, the corporate officers, are they doing a good job? Is the company consistently profitable? It's not that difficult of a question. It's either consistently profitable or it's not. Now, every single week on a Monday, we check how many companies are there available. Well, this week, they added some more. So there's 10,136, I forget. But there's over 10,000 companies to choose from. Well, stock market's been around for 400 years. That's a lot of companies to have to go through. Well, here's the funny thing about it. Every single public stock available has a paper trail, has a data entry points. What was the opening? What was the close? What was the high? What was the low? Where did it go? What is it doing? From the very beginning, it's a data stream. You go into the data stream, you say, is the company consistently profitable? There are so many people who invest in the stock market, and there are a lot of them out there that do nothing but invest in the stock market. Those are the ones you want to, listen to. Okay? How often has Intel been profitable? Ford, how long have they been profitable? Are they doing something good? Is it consistently increasing in value? These are important questions. So for me, 2 criteria, only 2. Consistency of profitability and weekly options. Other than that, I'm good. All righty. The house business, Chevron, huh? Okay. Don't know why you want to look at Chevron, but let's take a look. CVX, Chevron. No. Oh, imagine that. That was quick, wasn't it? Well, look at this. 30-day bottom, 30-day top, 2 days coming down. Every picture tells a story. Okay, it jumped up, now it's coming down. Look, from 134, is that right? 134? Yep. 134 to 152. That's $18. That's more than 12% from here to here. Yeah, it's going to be profit taking. And profit taking will keep going until it's done. We're going to write CVX for 2 weeks from today. I don't see it hitting it next week, but 2 weeks maybe. CVX. All right. How many people do you mentor? I'm cutting it off at 50. Wait a minute, no, I'm cutting it off at 100. We're getting close to that. So at some point, I'm not going to take any more. Okay, we're just going to say, that's it. And we're actually going to start our own hedge fund, using the exact same strategy, and open it up to investors when we meet all the criteria. So I've been doing this for the past 2 years. So in December, I'll have 2 years of good solid data to show that I average over 1% every single week for the last 2 years. Well, I didn't share every trade years ago and video. Now, I've been sharing my trades since 2011. That's just the trades. But there's no video to go along with it. So there is no, let's call it cherry picking. Okay? So I actually turn the computer on and you get to see as I trade 3 different accounts for the last 2 years. Every single trade I've done in the last 2 years has been live recorded and all the numbers are available. So the insurance companies and not the FCC, I think it's someone else. Let's call them the powers that be, want to see 2 years minimum of verifiable trades. So every single trade here, we will go to, what is it called? Hold on a second. Hold on a minute. Let's go right here. Let's go right there. And let's go right here. Account statement. Right. Nope, not that. Not that. Cash sweep right there. There it is. Okay. This right here is going to be sent to a third-party verifier to verify each one of these trades and to see the actual profit and loss. Okay? Once that happens, it's easier to get the corporation set up and the hedge fund rolling, all that kind of nice, neat, fun stuff. So yeah, we will be looking for 13 board members. Okay, and I think we have about half of them already. So we're looking for another 6 more board members to join a corporation. It's going to be a hedge fund, and the specific goal is to guarantee people a 20% return. That's the specific goal of the hedge fund that I'm going to create. And I'll have, oh, look at that, flying tomato. And I'm looking for the 13 board members that have the same drive, the same aspirations, the same goals. Simple, safe, predictable, consistent for the little guy. Because a lot of people out here are saying, you know what, I don't want to do this, but I'll do 20% a year if you can guarantee 20% a year. So if I can guarantee 20% a year, why the hell not? But I have to have all the ducks in a row. So at the end of the year, that will be a full 2 years of verifiable returns, which is basically what the investors want to see. Okay. I don't get people who just want to insult. I'm watching on TikTok and there's nothing mirrored. Yeah, I get it, T-Dale. But you see, here's the thing. Broadcasting on 9 different channels, okay? Each channel has their own software. So TikTok allows the mirroring of what you're looking at. So it looks normal. YouTube doesn't offer that. So the people on YouTube and Instagram, well, they're looking at everything you're looking at, but it looks mirrored to them. And they think I have control over that. I don't. There could be a way of doing it, but I don't know what it is. All right. Can I join your hedge fund and work for you? You can work with me, not for me, because I'm going to be just as equal as everybody else to a certain degree. You know, we'll all have the exact same voting rights and we'll all have the exact same amount of, everything is going to be equal. Okay, that's what I'm going to try to do. I want to create a company that everybody's on the exact same page, looking to help everyone else. So if you're interested, you know, let me know. We'll chat. Just here to support a portfolio of 100,000 to 150,000 should have how many stocks invested each week? Whatever you think you can personally handle yourself. Now, me personally, I like 6, 7 different companies per account. Okay, some of them are the same, some of them are not. Cipher Solutions, I'm getting humbled now, I'm poor. Well, I'm 62. I've been working since 1973. I was dirt ass poor. I could say I was piss poor, but we weren't piss poor. I'm not quite sure if you guys know what piss poor means. Yeah, it's an old term, goes all the way back to the Great Depression. Anyway, Felix wants to take a look at STZ for next week. Okay, STZ. 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 Interesting. Okay, 3 to 4 seconds. Did you see that? High, low, was, is. Look at this. Down, up, down, up, down, up. Look at that right there. Is that the 30-day bottom? Or is that the bottom of the year? Now it's turning around. It could very well be. All right, what do we have here? When selling covered calls, should you pick a stock with a more expensive option? No, it's always going to be related on the company itself, not the options, not the premiums, not the dividends. Consistency of profitability. Is the company run properly? You will see there are some companies that give out huge dividends, but there's no way to sustain it because you cannot give out more money than you bring in. Okay, and if you are going to increase your profits every single year, you have to be run properly, which means, you have to get a good management team in place, a good CEO, a good CFO, people who know how to run a good company. We got 20 minutes left. Okay, STZ, Felix, STZ. All right, high, low, we've seen that already. What do the numbers look like? 164, the 165, $5. Nice, I like that. What is this week looking like? 165, 120. Nah, not this week. I'll do next week. $5. That's a nice premium. Nice. All right, well, let's take a look. A year ago was the high of the year, 266.25. Well, the last 90 days, which would be March 24th. There we go. The last 90 days. High, low, was, is. Look at the motion. Up, down, up, down, up. 3 days to the upside, right there. Let's zoom in a little bit closer. Okay, here's your last 30 days. 30 days ago was the 30-day high. It dropped, 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 dropped. Friday was the bottom. Monday was higher. Tuesday was higher. You know what that means? If tomorrow is higher, that is where I would want to jump in if the numbers work. Okay, well, let's take a look. STZ at 165. Let's get rid of that. Let's go here. Let's go there. Covered call, the 165s right there. One contract. Here we go. Right there at the market. There we go. Confirm and send. Here's Johnny. Buy one covered call, STZ 100. It's the weekly. 3 July 25. That's next Friday. The 165 call option against STZ at the market to open, blah, blah, blah. Maximum profit, 566. Investment, 15,934. Now, I say investment because when you sell your stocks, you're going to get all that money back because I got 5 simple rules. Rule number 1, never buy something that doesn't make sense, that you don't want to hold on to, and that you'd like to have until the day you die. That's rule number 1. Make sure you pick a good stock. Well, it sounds logical, doesn't it? Rule number 2, never sell at a loss. It defeats the purpose of the game. Well, this game is weekly cash flow. So if I like STZ, Constellation Brands, if I like that company, I want to buy enough to create a cash flow asset. Okay? So the asset's going to cost me $15,900. The profit for this week, remember, the profit for this week is going to be different than the profit for next week, which is going to be different than the profit for the next week. But the nice thing about weekly options, I can do it every single week. Now, you do have to understand that the price, the value of your stock is going to go up, it's going to go down. Well, take a look at real estate. Real estate, the value goes up, the value comes down. Value goes up, value goes down. Now, there are differences between real estate and the stocks, even if you're creating a cash flow asset. Okay, a house, a rental property is a cash flow asset. If you treat the stock as a cash flow asset, well, you're paying for the asset. That asset is giving you a rate of return. Why would you ever think of selling it? Just because the value goes down, think of it this way. Let's go back to the chart. Wait a minute, before we do that, I want to find the rate of return. To get that, we want 566, the profit, divided by cost of the trade, including commissions and fees, 15,934. Well, that's a grand total of 3.5%. You have any idea what 3.5% looks like at the end of the year? Well, 1% a week is 50% at the end of the year. 2% a week is 100% at the end of the year. That's doubling your money every year at 2% a week. Well, that's nice. But this is 3.5%. So what is that? 170, 180? I don't know. Let's find out. Let's multiply 3.55 times 52 because there's 52 weeks in a year. 184.7. Damn it, I was close, wasn't I? I said 180. 180, 170, 180. Anyway, 184%, 3.55 per week. Now, are you going to get that? No, I don't get it. I've been trading for over 20 years. Every once in a while, I'll get 3, 4, 5% a week, but not that often. Okay, my average, which means this year I think I had three weeks I didn't make 1%. I got 7 accounts, 3 weeks I didn't make 1%. Okay, I have 3 losses this year. That's it, just 3. If a stock knee grow bearish, Fernando, I have no idea what that means, but okay. Okay, Hakuna Matata, we can talk about that hedge fund if you want to. Send me a DM with some kind of idea you're looking for. I'll give you the parameters of what we're looking for in board members. Matt, RTX, we got 12 minutes left. So let's make good ones. Wait a second, I want to write this one down.
James, can you look at Nike?
Yep.
Before we go?
Yep. Give me a second.
Yep.
Yeah, who am I chatting with? Because the name didn't pop up.
Paul.
Paul?
Paul Ryan.
Hey, Paul, how's your day going?
Great. Yours?
Awesome. I had an awesome day today. Woke up, did a couple nice trades this morning, went down, hung out with my son. We spent the day mowing the lawn, trimming the hedges. What kind of fun is that?
Nature, baby. Out in nature. Good stuff.
Hey, you know what? If I have a chance to help out my kids, I'm going to do it. I got the ability. I don't work, so I might as well do something.
You're living your best life, James.
I wouldn't call it the best, but it's pretty damn good. It's never been this good. My life has never been as good as it is at this moment.
Absolutely. We only have this moment.
Yeah, well, that's true. I don't like looking at the past. You want to ask me about my past? I don't want to talk about it. I want to talk about where we are, where we're going. Because the future is so bright, I got to wear shades. Okay, what did we just do? We just did this one, and it was 355. Okay, 3.55. And we were looking at the, what strike price? The 165s. 165. Okay, which one did we want to look at again? Paul.
Nike.
Which one? Oh, Nike. All right, let's do Nike. Nike. All right, let's get rid of this. Let's get rid of that. Let's go back to single. Let's go over to here, and let's go to Nike, NKE. Now, let's see how quick we can decide whether or not this is good. Remember, 3 to 4 seconds. Ready? Here we go. High, low, was, is, down, up, down, up, down, up, down, up. Ooh, look at that. I like that right there. That's awesome. So it got past the first phase. Second phase, 61.42. Well, I want to do the 62. Well, the 62 224. Hell yeah. I mean, come on. We all know who Nike is. So the question is, do you like Nike? Well, let's take a look. A year ago, Nike was at 98.16. Big drop. Back up, back down, back up. Look at the bottom right here. 51.92. That was right down on the 4th of April. Okay, Hakuna, I'm out of here, brother, in like 9 minutes. I don't think we have time to do the chat. All right, so catch me tomorrow because I still got a lot more questions to answer. I like this right here. That is awesome right there. Let's zoom into the last 30 days. Last 30 days would be right there. Okay, whoops, nope, that ain't it. Let's try that again. There it is right there. Last 30 days, check it out. 30 days ago, we're at 62. We dropped down to 60, jump up to 65, drop back down to 59. That was on Friday. Monday was higher. Tuesday was higher. You know what that means? Tomorrow, if she's right around here, opens up a little higher, well, I'm going to jump in if everything else looks good. Now, I like Nike. I bought Nike many times. Jump in, get my profits, jump out. What's wrong with that? Nike's on my list. Anytime it pops up and anytime it looks like this, oh, yeah, I'm looking at it. All right, so let's do one at 62 for Nike. Nike at 62. Here we go. Covered stock, the 62 right there for next week. Just one contract at the market to open. And here's Johnny. Buy one covered call to Nike. 100. That's the weeklies. 3 July 25. That's next Friday. The $62 call option against the Nike stock at the market to open to open. We're doing 2 trades. 278 is my profit. 5,900 is my investment. So this little cash flow machine is costing me 5,900. So let's see what it's going to give me this week if I so desire to do it. And it always comes back to that if I decide to do it. Okay. Calculator. 287. Okay, that's the profit, right? Right here, see? Maximum profit, 287. Now, remember in the beginning where I said I want something simple? Well, covered call is a very simple strategy. Buy the stock, sell the option. Simple. Okay? Number 2. Uh-oh, I forget what I was saying. Shit. Don't get old. It's not as fun as most people think it is. It's one of the first things to go. One of the first things to go is the old noodle. All right, so maximum profit, 287. Cost of the trade, including commissions and fees, 59.13. Well, what's my rate of return? Divide 59.18, and it comes to a grand total of 4.8. Hell yeah, I'm writing that one down. Nike, NKE. 4.8, and that is the 62. The 62. Now, here's the big one. Okay, number 1. Does it make sense? That's the big question. Some of you are new here, some of you don't quite understand it. Does it make sense? If I buy Nike tomorrow morning at the current price, which is $61.42, okay, that's the current price right there, $61.42. If I buy it at $61.42, turn around immediately, sell somebody the right, not the obligation. It's called a covered call. There are literally hundreds of videos available online explaining what a covered call is. You buy something, you sell it to someone else at a certain price by a certain date. Okay? Now, if I do it right, 4.8%. I like that number. But number 1, does it make sense? Number 2, do I like Nike? Number 3, do I like Nike at this current price? Number 4, will I agree to buy it, sell a covered call every single week until it hits my target price? Well, what's my target price? 62. If I bought it at 61.42, the closest strike price to that is going to be the 62. Now, am I okay with that? Am I willing to buy Nike and hold on to it till the day I die, never sell it unless it goes over 62? Because that's my target. How many weeks can I collect some premium? Now, granted, sometimes you're going to get a nice premium like this, and the next week maybe you'll get 1-2%. Maybe you'll get 0.5%. Are you okay with that? It's cash flow coming in. I'm retired, so everything I do is geared to 2 things. 2, 1, consistency of profitability. 2, preservation of my capital. Now, unlike some of you that are still working, I do not have the luxury of, I like saying this, I do not have the luxury of being wrong. I don't have the luxury of losing. Now, I am perfectly capable, okay? I am perfectly capable of going back to work and punching a time clock. I have no desire. I've been working since 1973. And I love working, I do. I still work nowadays, I just don't get paid. And I don't work for other people. I work for my children, and I work for my mother, and I work for my family. That's it. Fire. I'm trying to catch on to your strategy, 1% a week. Well, I'm here every night. Keep on coming back. Keep on asking questions. All right, Hakuna wants to chat for a minute. Here we go. So I'm getting ready to say goodbye to everyone else while we're doing that. Hakuna, it's up to you now. I sent you the invite. Let's get rid of that. Let's get rid of that. Let's get rid of this. Let's go back to that. There we go. All right. And let's go back to this. So we got 2 minutes left. And then I'm calling in the next.
Thank you so much for having me here. I actually turned down the light. I'm about to sleep. I just thought it was so interesting regarding the hedge fund. I just wanted to say, in what time period are we talking about?
Well, at the end of December, I will have 2 full years of data. And that's basically what investors want to see, at least a bare minimum of 2 full years of data. Now, I've been live every night for the last 2 years, so every single one of my trades not only time-stamped, but also has live video to go along with it. So nobody could ever accuse me of cherry-picking stocks, because you get to see every single trade that I've done on the last 2 years, and you get to see the data stream from the live account, which shows each and every transaction of the account. So there are a lot of things that I neglect, okay? I don't take a look at the interest rates. I pay 8% for my margin. I don't really take a look at that. I don't really take a look at the fees and the commissions. I just look at the overall broad strokes, okay? So, but on average, over 1.4% this year. So.
And will this be purely on cover calls, or will you also offer other things like I know you are also doing, like spreads?
Okay, what's going to happen? Basically, we're going to have 13 board members, and then we're going to allocate how much are we doing on covered calls, how much are we doing on cash secured puts, how much are we doing on spreads. We're going to probably, more than likely, delegate who does what. Okay, there's some people out there that are better traders than I am. Well, I'm pretty good at what I'm doing, and I'm pretty strict at what I do. Okay, I like what I do because it works. There might be other people out there that are better at spreads, that are better at cash secured puts. And then it's always going to be a a company run by other people with the same focus in mind, if that makes sense.
Okay. So the step is to pitch it, present the evidence for how successful you have been so far, and then they will come up with capital. Is that correct?
That's correct. There's only going to be 13 board members, and there's quite a bit of people that actually.
I noticed that you said you lowered the expectations a little bit. You said 20%, but you said
No. Wait. See, a hedge fund. In order for a hedge fund or any type of fund to be guaranteed by an insurance company, okay, has to have certain criteria. Most insurance companies won't insure for over 12% return. Well, how can I get an insurance company to insure at 20% return? Because okay, now people who invest in the company, okay, they just either buy the company stock or they buy the corporate bonds. The corporate bonds are going to be guaranteed at 20% per year. That's it. I mean, you can get a government bond that pays 3 to 5%, or you can get a private corporate bond that can pay up to 20%, if that's what you're looking for.
So, last question. Is this related to the insurance company, or is it really capped? I mean, can the investors get more than the 20%? So I was thinking if that was a minimum.
Okay, so it's going to be all discussed in the private placement memorandum, the PPM. Okay, and it will all be discussed with the other 12 board members, because it has to be structured a certain way where everybody agrees and everybody's on the same page.
Yeah. Okay, that sounds cool.
Well,
Monsieur, I am interested.
Okay, well, I'll put your name in the hat, and then when we're ready to actually have everybody who's interested get online, and then we're going to pick and choose what we want to do, what we don't want to do. And then then all the names that are in the hat, they're going to be voted upon by each and every other person. So just because you want to, just because you got the money, doesn't mean everybody's going to like you and say, sure, let's bring him on.
That's true.
Okay? See, I want to make sure, because the little guy, now see, I brought up dirt poor. I'm talking dirt poor back in the 60s, 70s, and 80s. We were on welfare. We ate government food, powdered eggs, with a big, huge, yeah, don't get me wrong, my life wasn't that bad, but I didn't know, okay? Because as you're a kid, you don't know you're poor until your other classmates tell you. It wasn't until junior high I realized that I was poor because my other classmates told me so. But anyway, I want the little guy to get a decent opportunity. And I think 20%, a guaranteed 20% rate of return is a good number to go by. Now, being a board member, you get different perks, which means your rate of return will be a hell of a lot more than 20%. But for those who just say, here, take my money, give me my 20%, I'm okay with that.
Yeah, all right, I get it.
Okay? Yeah, because a corporate bond, if we guarantee 20%, right, you give me $100,000, you're going to get $20,000 a year. Or I don't know if we're going to do it quarterly or monthly. We might do it monthly because a lot of people like monthly payments.
Yeah.
All right, it's past it.
It's interesting.
Yeah, it's past 11.
By the way, just something else. You probably heard about it. That Circle, those the stable coin, they got listed on the New York Stock Exchange, and the price just skyrocketed.
Yeah.
Incredible.
Probably, but I don't do cryptocurrency yet until I can figure out a way. What guarantees can I get from it, or what support is
yes,
there.
but you know, a stable coin that is pegged to the US dollar. So basically, people who want to park their money for a shorter time while they're going in and out of other risky crypto assets. So and the stable coin is backed by US Treasury bond. So it's actually low hanging fruit from them because the money they get, the fiat currency, they invest in treasury bonds. So it's basically free interest that they are collecting.
Correct. It's always going to be about the money.
Yeah, absolutely.
Okay.
Okay, thank you for letting me up. I wasn't going to take so much of your time.
I'll talk.
Awesome stream as always, sir.
I'll talk to you another day. Have a great day.
Absolutely. You too. Have a good evening.
Okay,
Bye-bye.
you got it. Okay, we turned
Thank you.
10,000 Bitcoin into 80,000. Now I'm not sure where to move forward. I can see you. Can you see me? I'm sitting in the. Okay. Bitcoin blew up already. Yep, whatever. Crypto can be profitable.
Good night.
Yep, catch you later. I'm getting ready to sign off. I just want to finish up the rest of these questions. And Felix, you still have a mortgage? Yeah, why wouldn't I have a mortgage? Think of it this way, Felix. Mortgage money is the cheapest money you will ever borrow. Think of it this way. Let's say I got a $400,000 house. 80% of 400,000 is 320,000. You break that up into monthly payments, fine. What am I paying on it? 8%, 10%? Great. I got 320,000 in cash and I'm making 1% a week, which is $3,200 a week, which is, my friend, was at $160,000 a year. I'm borrowing it at 8%, I'm making 50%. You do the math. Yeah, I still have a mortgage. And a first mortgage, 100% of the interest is a tax deduction. Hey, TDO, Wade Cook, haven't heard that name in years.
Pardon me for asking, but if you want, you could also look at. I would appreciate if you could look at the cold stuff. Cold.
Okay, can we do it tomorrow morning, my dear? It's 11 o'clock, and I told my girlfriend we're going to quit at 11.
Oh, all right then. I was also thinking like your thoughts about the S&P 500.
Yeah, we'll look at coals in the morning.
Yeah.
All righty? All right, what do we have here, Bruno? Okay, we're done here. You guys have a great night. And now, okay, we're done here. You guys have a great night there. Oh, done. And now, and over here, I'm pretty sure, can I get your thoughts on KBR? Okay, fundraiser. We can do that tomorrow. Don't forget the question, sir. I wouldn't love that. Blah, blah, blah. Mr. Gift, blah, blah, blah. Ooh, Nokia. TikTok Tommy. I'll take a look at that tomorrow. Gerald, no. Can I also be part of the hedge fund? The stock goes on. You got to send me your phone number. We can have a conversation. It's not as easy as you think. What software is he using? Okay, FL Hockey. That is Think or Swim, offered through Charles Schwab. I lost a lot of money on Nike. Terribly sorry. I haven't lost any money on Nike. Hey, 86 is in the house. Nike has e-call on Thursday. Okay, Brian, do you ever look at earnings dates of the stocks and contracts you're getting in? Absolutely. I lost a lot of money on, okay, I feel bad that you lost money on Nike. Okay, I have a different approach than most people. I haven't lost any money on Nike. Okay. What does break-even stock price means above max profit on the order? Well, Dan, anything over the break-even is going to be a profit. If the stock comes down, it comes down to a certain point, that is your break-even. Okay, let's do this, that, done. All right, that's done. Here, what else do we got? What are you guys talking about? Eagle 18, we're talking about investing in dividend stocks for a weekly cash flow. Simple state, predictable, 1% per week. That's what we're talking about. Which state were you raised? Boston. Volatility good. All right. Think we're a bit off topic. Maybe. Is it equally safe to invest in treasury bills through the bank JP Morgan? Well, a treasury bill is a treasury bill. It doesn't really matter where you get it from. That's done with over here. All right, so done over here. You guys have a great night. We'll catch you all tomorrow, same time. And over here, what do we got? Google, no. Target, yes. Intel, yes. Bruno, we'll have to take a look at it tomorrow. STZs, Felix, we'll take a look at STZ tomorrow. Clown, thank you. What's up, James? Into the blue here. Cool beans. All righty. Edward. All right. MasterCard. Bruno, we'll take a look at tomorrow. Chevron, we already looked at. EPD, we'll have to look at that tomorrow also. What are your thoughts on hired financial advisors? If you're going to hire a financial advisor, are they giving you at least 20% per year? At least. Go ahead if you have experience with any, okay? I don't. I was just curious. Okay, stay safe. Target, please do that tomorrow. Can you suggest? No, I don't do Forex. All right. Way too many questions on YouTube. Sorry, guys. I can't get to all of them. Catch you guys